In a traditional insurance distribution model, agents sell policies on behalf of insurance carriers. The policyholder receives insurance coverage, the agent is paid a commission, and claims are paid by the carrier. However, in some situations, an insurance carrier may want access to additional licensed products, as insurance in the U.S. is regulated at the state level, or the carrier may not have a certain rating from one of the industry rating agencies, like AM Best, which inhibits the carrier's ability to sell policies. State National solves this problem for carriers in these situations through a fronting solution. So, what is fronting? It's actually quite simple. State National writes the insurance policies on behalf of the carrier. Our paper is A-rated by AM Best, and we are licensed in all 50 states. Through our arrangement with the carrier, virtually 100% of the insurance risk is transferred back to the carrier. As a result, State National receives a fee known as a ceding fee. The insured receives desired coverage, and the carrier supports the business. Everybody wins. But there are additional ways fronting can be beneficial. State National also works with managing general agencies, or MGAs, and program managers who want to have more control over the insurance products they distribute, along with increased flexibility, enhanced access to risk takers, and compressed time to market. By partnering with State National, the program managers and MGAs not only have more control, but also benefit from a more stable business model, where multiple risk takers are efficiently able to support the business on an ongoing basis. In other words, the fronting arrangement helps solve the traditional problem that carriers create when they go in and out of certain markets. So, how do the economics work? By eliminating carrier overhead and administrative costs that burden a traditional MGA-carrier relationship, the State National model can offer additional profits to be shared between the ultimate risk taker and the MGA program manager. In other cases, capacity providers, reinsurance companies, and alternative capital investors, for example, hedge funds, may want access to primary insurance risks, which is the layer of risk that traditional carriers write. However, these capacity providers typically need the support of a broadly licensed and highly rated carrier experienced with this unique business model. Here again, State National's fronting solutions solve the challenges. Business is written on State National paper, the insurance risk is transferred virtually 100% to the ultimate capacity providers, and again, State National is paid a fee to utilize its balance sheet and effectively manage the process. You might be asking yourself, why would alternative capital sources want to fund these insurance transactions? And how do the economics work? For one, property catastrophe exposure is considered an uncorrelated risk in terms of an investable asset class. This means if a hurricane strikes Florida and causes damage, it is unlikely to have a major impact on the stock market, thus a relatively new investment asset class without broad market correlation. Additionally, many of these alternative capital sources are more efficiently structured than traditional carriers, with the ability to deliver flexible investment strategies, diversified return, and higher investment yields. The good news for State National is that alternative capital in the insurance industry is continuing its aggressive growth, and its growth is expected to continue significantly outpacing the traditional reinsurance industry. As the leading pure-play provider of fronting solutions for nearly 30 years, State National is poised to grow as the market for fronting solutions continues to gain momentum. We are State National.